Here are the numbers, Cory. Revenue in the fourth quarter of 2016, $1.4 billion. That is now up to $2.2 billion in the fourth quarter of last year. And also, losses significantly narrowing down from almost $900 million to almost $500 million.
Yeah, it looks like the information got a scoop with those actual financials and full financials. And I think what we see here is a reduction in expenses, principally from according to the information, from reducing ad spending. And a lot of the ad spending was spent, interestingly, in apps, within apps. This is certainly a mobile-first company, and they spend ads that way, too. But spending less in terms of advertising, letting the service grow. And the result is, fundamentally, that the business is getting closer to profitability, which is to say it's still losing a vast and incredible amount of money every single quarter, every single minute. This is losing money. But what we know from information we received in the past is that Uber likes to talk about how successful they are on a city-by-city basis, or even in a domestic and a U.S. basis, with the notion that as they draw in more money from other outside investors, that they will go into other locales and they'll have the same kind of success they've had in the U.S. The truth has been different than that. They've had great struggles in places like China, where they've sunk billions of dollars, but faced competition unlike what they face in the U.S. from Lyft and many others. And the result is the business has not been as profitable elsewhere. The new leadership of the company wants to change it, of course, as they inch towards an IPO. Now they've put that off for a while, but to getting closer, an IPO, as they've said, is their goal, and reducing losses and showing that revenue growth can continue is a big key to that.
I'm reading Eric Newcomer's analysis just coming in across the terminal. He's saying, look, Uber had a painful 2017, but the business managed to grow. It is interesting that Uber has decided to release this information, given that it's not a publicly traded company. What do you make of that? Yeah,
we'll see what the information, how much they release and how much they don't. But I think that they have so many shareholders, at a certain point they might even have to release, depending on your interpretation of SEC law, with a certain number of shareholders you're going to have to release certain information. The Job Act lowers that requirement, but with this high level of revenues, we'll see what they decide to give us. They also want to prime the pump for investors and get investors to have a notion of what this business is when the day comes that they want to sell this stock to the public. Let's also remember that there are a lot of insiders of the company selling shares as private shareholders to the secondary market of shareholders, and that's an important constituency for them as well.